Hey, hello again, the crypto world. One more time at DeFi IoT. Today, I want to talk about some advantages of maintaining your GPU mining business. And should you consider it a business or not consider it a business? I got a 3080 LHR here, and we're going to do some experimenting with that too. We're going to get into that as we talk about this video. But I really want to talk about a course I took this morning on crypto taxation, more so in the United States and kind of Europe, and how that's kind of being considered and how taxes are going to fall on the crypto world and where mining has an advantage. Let's talk about that right now. All right, so jumping right into this today, I've got some notes that I took today that I kind of want to read off of, and the course I took this morning. Now, look, I'm not a financial advisor. I'm not a CPA. I'm going to give you some links we can go on to where there are actual CPAs, and they can help you out better, or if you have your own. Just going to give you some parameters, some things we've talked about in the past, of the advantages and disadvantages, where to actually, you can gain more advantages in cryptocurrency investing, if you want to say, whether that's in a business or whether it's just as a hobby, where those advantages, disadvantages are for taxation purposes. Because that's going to be the big hit at the end of the day. I mean, if you talk about, for example, you're in California and you got to pay a California tax as well as a federal tax, you're going to be pushing almost 50% of your gains, of your earnings. And how they determine those unrealized earnings too are going to be something that is something you really need to look into, and it's still rather gray and hard to figure out and establish. This is why, first of all, it's one reason why we are establishing our business into a jurisdiction that is offshore and crypto friendly, and the business will legitimately exist there. We will be employees to that business, and I'm going to be paid then as an employee and not necessarily as a crypto business. But if you are in the US, you're not going to be doing that. There are ways. Now, there are states, right, like Wyoming, for example, that's tax-free, especially in crypto, and very pro-crypto mining. There's other states as well that or taxes are more reduced, in Florida, et cetera. Wouldn't say necessarily Texas is probably the most reduced taxes, but it's not as high as California or New York, for example. And New York has completely banned the mining as far as that goes. So let's talk a little about this. I want to jump into, let's look at the screen here. This is basically, a basic home crypto mining farm. I just pulled a picture off of Google. You have this crypto mining farm here. This is somebody here that might want to be a hobby miner. Now, you're a hobby miner. The advantage and disadvantage of that is, okay, you make your gains. If you are on a centralized platform, in other words, you're pulling your money out. Let's say you're mining Ethereum, Ether, and you pull your money out through Coinbase. Well, Coinbase is going to be tracking you and going to be reporting you because they're KYCing. They know who you are. So you pull your money back out through Coinbase. That's where your wallet is. The IRS is going to know that you took that money. And if you don't report on that money, they're going to try to slam down hard on people right now. They're actually going to be funding a separate arm. That's what the target goal is on this Biden administration, a separate arm that's going to just hunt down cryptocurrency investors and miners to charge you to take your money, essentially, to make sure you're in compliance with the law. So here are some tips that I got today from a CPA. And I'll just say, that there was a course online that you could take, and it was actually produced by Radio Shack. They're actually putting together a Discord. You got to pay a little money to be involved, but they have these expert CPAs on crypto that are there, and you can ask questions all you want to. When we get that link, I'll send that link. We'll do another video, and I'll put it down below. But I sat in this course for about, an hour and 15 minutes until another guy came along, I mentioned who, and kind of like deviated from really the good, real meat of the information from the CPA. Anyway, some things I was able to take from this, things that were confirmed also with what we're doing, is that trusts, you can put your cryptocurrencies, you can put your property, as you will, into a trust account. Remember something, once you do that, a true trust account, you give up control. So somebody else has to have control. That doesn't mean that you can't have somebody that's close to you that you can trust, which is hard to do these days, and when the economy gets more difficult, might be even harder to do, that will actually move things as you request them to do. And under the IRS ruling, apparently you cannot have any control. So if they have, at the end of the day, they can take that money out and then go spend if they want to, and you can't do anything about it, then they have control. And there are ways you can make trusts that are that way. And the one thing you're going to be really, really careful on is the difference between the words revocable and irrevocable. Right? Stay with me because I want to get to the fact of where GPU mining and node mining actually has an advantage. So if you are node mining, not necessarily staking, because staking also can fall into different categories. Because you're going to have to, when you're staking and you get earnings on that staking, from my understanding, you're going to have to report that on a day-to-day basis and on the value of that token or coin that day that you got those earnings. So that's going to be difficult, but there are softwares being developed that are going to help you track all this. Now, the solution to a lot of this is like what we're doing. We are going offshore completely with everything. If we do have anything physical in the United States, obviously we're going to have to pay that percentage or declare that percentage in the States, such as maybe our ASIC and GPU mining, but we're going to put that in a state that's also tax-free, and it's going to run through a business. And this is what I want to get to. So you can put it all into a trust. Or if you're not a day trader, and day trading is tough to do this, but you can actually form a business as a day trader. You can. There's some more gray areas. You're going to have to really talk to your own CPA on this, but it's really cut and dry already. The lines are already being set that if you mine, or node miner, or a GPU miner, or an ASIC miner, mining, you develop a business. Now, what kind of business entity do you want to develop? So we can keep this short. I asked the specific question. And the specific question was, which entity, an LLC, an S Corp, or a C Corp, is the most beneficial for a crypto miner? Now, obviously, when you're going to build this business, you're going to want to have more than one GPU, right? You're going to need to have reason to it because there's cost to maintain it, and there's still going to be a taxation in it. Now, if you're only making $100 a year in mining, you're not really going to have to worry about much as it is. However, there are a few things that I want to kind of go through here real quickly. And, my concern was, is it more advantageous to set up what's called a limited liability company, LLC, because that's more of a flow-through company. It's easier to maintain. And the CPA actually responded that what you're really going to want to look at is an S Corp. Only about 10 or 15% of the people out there mining are going to want a C Corp. And that's going to be your bigger miners, not what you see in the picture here. That's not what I'm talking about. What I'm talking about here is these kind of miners. These right here, where you see this type of a mining here, where you just have these massive mining farms. There you might want to be looking at a C Corp type of a structure, which most of them are already in a business and already formed some sort of type of entity, and that's not hobby mining. So it really doesn't pertain to most of us and most of you that are listening. So where's that put you and I? Well, what the accountant suggested is that we form a limited liability company, an LLC, and then we have it basically taxed as an S Corp, right? So we're going to form an LLC, which is much easier to form, but we run it as an S Corp. What are the advantages of that? Well, the advantages are you're going to have the protection of an LLC. The S Corp, then you're going to tax as an S Corp. You're going to be able to have those tax advantages. Every time I have a GPU or I have a motherboard or something needs repairs, or I buy something or I replace something, or something burns out and I have to replace something, a riser or whatever, all that is tax deductible off of my earnings because it's a business. And the IRS has already made clear lines that mining is a business. So then, if this is more of an encouragement then for crypto mining to continue, and I think this is also something I feel personally that's going to incentivize crypto mining to continue. Now, where would you fall, jumping aside? Where do you fall on helium? Where do you fall on data storage, like with SC Prime mining, will all that be considered as mining? And it looks as if it will be. However, we'll wait to see how that's going to come out down the road, because you're not really mining. In helium, you can try to say, okay, we are mining, but really we're being paid to provide a network service. So will you structure a business there? Well, yeah, we did. We structured a limited liability type of a business. We did that offshore, and we ran all of our helium, all of our miners through that business. Now, we aren't into day trading as of yet, but our business will do day trading later this year. We're going to go into day trading with bots, etc., because that's something we said we want to do later in the year, and we're heading that direction, especially with so much inconsistency out there with all these new quote-unquote projects coming out, like Planet Watch and so forth, that are really just coming out by the seat of their pants, and you jump into them, and then tomorrow you lose your money, right? So the idea is that we want to try to get back to basics some. We want to really filter a lot more of these companies coming out. A lot of people come out maybe with good intentions, but they don't really have any real world experience in applying their expertise or their knowledge in running a business and or end user sales, for example. Who am I going to sell that data to, right? So the idea then in GPU mining or ASIC mining, any type of mining that be considered, and I don't know if these hotspots are going to be considered mining or not. All depends on how they produce that token, right? So that's just still in a gray area. But we do know definitely the GPU mining, ASIC mining, anything that considered mining, right? Whether you're doing it with a CPU, a GPU, however, any type of mining you're doing are clear delineated lines now of how that's going to be taxed. And if you have enough investment, then you can actually and should actually form an LLC, is what I would recommend to do. Now, I'm not giving you tax advice, but if you were my best friend and you were talking to me and said, what are you doing? I said, this is what we're doing, okay? And tax it under an S Corp. Now, obviously, you're going to have to keep track of everything that takes place, right? You're going to have to track everything. So how do you do that? Well, here's a couple links I'll put down below. And while you're down there below, look at those links, hit the subscribe button, make that red turn gray, please. Give us a thumbs up and hit the bell, because we keep you informed in all these different areas of crypto. I think we're unique in that we are kind of in the whole encompassing of crypto, the economics of it, the politics of it, et cetera, how it's affected by it, as well as new projects coming out. We've backed off of some. I saw one today on Fonz Finds about a bird mining, a camera that can, monitors birds, and it's a miner. Okay, well, we'll look into that. We'll see what it looks like, and then we'll tell you what we feel about it. We try things. We got a threefold miner here now set up, and we're going to be doing a DIY as well on threefold. See how that works out for you. And bandwidth sharing. We've got the REVOIFis coming. We got a bunch of projects coming. The weather station coming. We got a lot of those coming. Some arrived. I just got back here, and I'm going back again next week. So let's get back over here to where can I find, how can I keep track of everything? It's going to be a real nightmare, really, for stakers. And I hate to say this, but I'm kind of glad, because I don't like staking. Staking centralizes everything. So if you're going to jump off of GPUs and you're going to go into staking, you're going to have to pay the price of the IRS. It's going to be a real nightmare. You're going to have to monitor things. As well as if you're just doing day trading, you're going to have to monitor everything. And if you're just investing and holding things, if you got an asset in your hands and you have to look at that value of it, and then, the downside to that is that it's being considered like a CD, right? But if the downside is that, a CD has dollars in it, that dollar doesn't lose value every day, so to speak. It is based on the dollar. Whereas if Bitcoin holding it can lose value every day, but the taxation basis is right now very gray on whether it's going to come off of the initial value or the value of each day. Now, I'm sure it's going to come down. Well, I'm not sure. I would think it's going to come down to the value of each day. So you're going to have to monitor all that. If you're GPU mining, let's not worry so much about that, but to track everything you're doing in your wallets. I'm going to put in a word for decentralized wallets and decentralized platforms, because they won't report you. You are required to report it. And if you make a mistake, you do your best effort and you make a mistake, nobody's going to know the difference. So you're safer. This is why we need to support decentralized platforms and decentralized wallets, not like Coinbase, for example. All right, so let's jump over here. You got cryptotax.com. Okay, it's easy to calculate your cryptocurrency taxes. You can go through here and take a look at it yourself. I won't jump into it today. We can later get into this, 'cause I think this could be more of an issue. But these guys, this is the guy that taught the course today. And he actually says here, look, we're not accepting any new clients for 2021 taxes. We're full. See you next year. There are not many CPAs or accountants out there that are savvy on taxation, on taxation for cryptocurrencies. So this is somebody that I think was very enlightening today. From my experience as a CEO in dealing with offshore trusts, dealing with domestic trusts in the U.S. as well as in Latin countries, what he talked about, he's on top of his game, and I think that I felt that he really knows where he's going with things and where, you know, where our government's going to go as far as passing new tax laws, the IRS and Congress and so forth. The other is you can go into here. Right, so here in coin tracking, you can also go in and create an account with them. Now, look, all of these this software is all relatively new. There's going to be glitches in this, and this is even what the CPA was saying today, that, you know, nothing's like set yet, and there's going to be a lot of changes coming down the road over the next couple of years. And you know, and I think what you're going to find too is, because if they make the laws really broad, what's going to happen is that then, you know, there's a lot of room for interpreting. Then you also can come back to the fact of if they make them real narrow, then there's ways we can that you know the projects will skirt around those tax laws, and they can, and I think they will. We're going to push for decentralization, and it's not that anybody's trying to avoid their taxes. Is that you know, cryptocurrency is being taxed on a very unfair basis right now, and I don't mind paying my fair share of just taxes, but 50% of my earnings is way too much for any government to ask from me. That's tyranny. I'm sorry. Anyway, in summary, just want to go over with you a couple of things here that to remember. When you're mining nodes or you're crypto mining in any way, ASICs, GPUs, etc., and you form a company, an LLC, taxed as an S corp, is what the CPA recommended today, being the best and advantageous to reduce your earnings and your taxation, because you're being paid taxed on earnings now, not on capital gains tax, right? Because it's actually a job, which was really good because we were worried about the mining being considered like if you're just, you know, buying and holding or day trading in any type of cryptocurrencies. So that is separated out. A couple other advantages are that also, remember, you have the $10,000 gift tax still. It's the same as if it's in fiat or if it's in cryptocurrencies. Anything under $10,000 you can gift to somebody else. That's not taxable. Anything over that will be taxable, right? Your inheritance taxes still well above $10 million in the crypto. So you're as far as passing inheritance, your crypto on to your heirs, you still have those advantages. For now, we'll see what happens down the road. Also, something else I noted here was that, you know, we talked about putting him in a trust. Remember, when you put into a trust, though, an irrevocable trust is what you want, not a revocable trust. Revocable means I can put it in, I can take it out and take control again. I put into an irrevocable trust and give it to a trustee, and I assign it to that trustee. All I can do, my control over that from there on out, is just change trustees. And there is even a sequence of how that takes place. Trustee is the person who then takes control of your assets. So therein is your risk. You cannot have control of it in any way, shape, or form for it to be considered in a trust. But there are companies out there, offshore trusts, that actually will do these things for you, and that's what they do. Now, can they take your money down the road? They could. And that's what has to be able to happen. That risk has to be there for that trust to qualify. Then in the IRS is something that you don't have control over, right? One other thing I want to talk about is the actual, how can I take my crypto assets, and we talked about this before in life insurance, right? How can I take those crypto assets then do something even simpler? Well, you can, you know, there are ways now you can put these in from my understanding, in retirement type of benefit accounts, right? There's another way you can do this inside of a life insurance. We're talking about a life insurance account that you can actually accrue your benefit. In other words, you can grow your benefit by investing into that life insurance. And in that life insurance, there are many of them that allow you to actually borrow against your life insurance. So what we're doing here at DeFi is every one of us this year are establishing our life insurance. And we're going to establish our life insurance at $100,000. But all of our crypto assets through our banking system offshore are going to go into that life insurance. So if we want to take that out in any jurisdiction where we're taxable, we can take that out borrowing against our policy. Now, they are going to charge you. Life insurance will charge you an interest rate to put back into your account, but you're putting your own money back in, and they take a fee, a small fee for doing this for you. Has to be legitimate, has to be a third party. You can't just create one entity and borrow from another entity of your own. Has to be complete independence, right? So there are advantages there as far as a life insurance. There are disadvantages as well, right? Because there's a certain amount. But listen, if you borrow money, let's say I go onto a crypto exchange and I borrow against my assets. I take all my assets and I borrow against those. Now, if I borrow against that money I receive, I could borrow $100,000. I get the $100,000 in my bank account. I do not have to pay taxes on that money. Borrowed money is not taxable. If I do not ever pay that back, if I don't pay that back, then I am charged a tax on that. It's like if you had a mortgage and you bankrupt on your mortgage, or I shouldn't say bankrupt on your mortgage, you default on your mortgage, you have to pay off what was left on your mortgage as a type of a gain in your taxation because you got relieved of that debt. That was something that really I saw come out during the Obama administration. Not to cut him down or anything, I'm just giving you some time frame of when that really started being emphasized more. Before you couldn't be, debt was considered differently, right? There was no debtor's prison, so to speak, either. Now, if you don't pay tax on that debt, then there is debtor's prison through the IRS. Regardless, GPUs, crypto mining still remains the forefront where we can battle out and reduce our earnings. We can actually show what we spent and our losses, so forth, as well as what our earnings are, our gains, so that we get our earnings. Very pro on crypto mining. That's why we're going to build our farm. I leave in a couple of days, go back again and keep working to get everything sold so we can buy our land to build our crypto farm, which can be completely 100% independent, solar, renewable energy, etc. And there's some new Bitcoin machines came out. Voscoin even had showed one the other day. I missed that actually, bummer. I'll share that with you too in a little bit. DeFi IoT, we'll talk more tomorrow. We hope you enjoyed this segment of our video with DeFi IoT. Remember, we're not professional advisors. We do this as a business, as a hobby, and we study, we experiment, and we want to share it with you. If you can get some benefit from this, great. What we do is we go out, we purchase with our own money, and we experiment to see what true results are. We want you to be able to share in our experiences so you don't have to lose like we have. If you can win where we've won, fantastic. Remember to do your own research and your own homework. It's very important before you make any decisions. We will see you in our next video.